Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. And today, I just thought of this, Ellie. We're going to be talking about use tax. That's not really sales tax. But anyway, we're going to be talking about use tax, and this is we did a two-part podcast series here about use tax, and this is part two. And although you may be watching it at a different time, I'm taping it at the same time, so I'm a little bit casual today because I just came in from taking care of the horses out on the ranch. And Ellie will probably make fun of me again, my accent as I'm taking care of horses on the ranch. But uh, might as well go ahead and introduce you to Ellie so she can start making fun of me.
You know what? The accent wasn't as strong that time around. So if you want to hear the accent and you haven't listened to part one, go listen to it. It'll give you a basic overview anyway. And before we get started, we'll do the same introduction again. Please follow, like, subscribe to our podcast. We appreciate having you here so much. And it's great to be here myself. So we are full service so we are a full service consulting and solutions firm. We have a great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and, like our name states, more. So if you have questions about our services, please reach out. We'd love to hear from you, and we'd love to work with you as well. So this episode is going to be a little bit more of a quiz for Mike here. I guess we can see how he does. And Mike, the first thing we want you to talk about, auditors and use tax. Tie it together for us.
All right. So we sort of touched on this in the first part, but when an auditor comes out, they're not just looking at your sales. They want to make sure that you're collecting the right amount of tax, that all the tax that's been collected has been remitted, that all of your exemption certificates are in a row. They're also looking at your purchases because just because your vendor didn't charge you sales tax doesn't mean that it's a tax-free transaction. If it was if it's taxable and the vendor didn't charge you, you're supposed to self-assess and remit it to the state directly as a use tax, a consumer use tax. So the auditor's looking at your purchases to make sure that all of the tax has been remitted, that needs to be remitted. And if not, then they're going to set that up and you're going to have to pay the back tax plus the penalty and interest. So that's a big issue now. There's a secondary issue. We talked about it more. It's one of the primary ways that auditors find targets for leads. If someone's not charging tax, they usually end up on a list, and there's a discovery unit that will follow up on their companies. But we'll talk about that more in another podcast. Today, we just want to reemphasize that use tax is either the number one or number two issue for large assessments in an audit. Number one or number two, depending on what type of business you have, is certificates, but use tax is the second biggest or first biggest if you don't have a responsibility to collect certificates in an audit. And that's why you need to have some sort of system in place to track and self-assess and remit your use tax. Someone has to be reviewing transactions. Now, you can review all of your transactions. If you have a lot of transactions, that's usually cost prohibitive. You can target certain vendors. Certain vendors get it wrong all of the time. You can target certain invoices over a certain dollar amount, and then anything under that dollar amount, you can do samples on. You can, have tranches for the samples if you want to do it. So there's a number of different ways to implement a system, um, but you got to have some sort of system in place. And a lot of software companies are going to tell you, hey, use our software. You don't ever have to worry about anything again. Usually that's a load of malarkey, just like a lot of things software companies tell you. You'd have to totally change the way you're doing your accounting and bookkeeping and everything else in order for that to be true. And most people don't want to go through that. So, uh, software does serve a purpose. I think that you can't just rely on a software company, though. I think that if you have someone managing the use tax accrual process, they can utilize software to make their job a lot easier, but don't fall for that malarkey that all you need to do is utilize our software. It just is not going to work. You got to have someone who is going to work with that software to make it work for you.
And that's a perfect lead into our next question or our next little quiz for you, I guess here, Mike, is tell us about common problems. So we're just touching base on one of them. Tell us a little bit more about common problems people are having.
We could speak for hours on common problems. I mean, as I said, this is a leading cause, but what trips up a lot of companies, when they're making fixed asset purchases, they often, don't realize the impact they may have, and they may or not have paid tax. So that's a problem area. Um, Another problem area is large software purchases. And sometimes because software is going to be used in multiple states, you don't pay any tax at the time of purchase at all. But the use tax has to be reported in each state where the software is actually being used. So software is another area. Auditors are looking for large purchases of software. Again, fixed assets, large purchases. That's where the big bang for the dollar is going to be for the auditor. They will look at your expenses also, but it's those fixed assets that they're really looking out for. Software is a big thing that they're looking out for. Services. A lot of people don't realize that services are taxable. The vendors don't realize their services are taxable sometimes. You got to know the taxability of services, and if they're not charging you the tax, you got to self-assess and remit on that. If you're a contractor, there's all sorts of issues. If you're making improvements to real property, if something's being incorporated into the real property, generally you do not charge tax to your customer because title doesn't transfer until it's already incorporated. It becomes a part of the real estate, and real estate is generally not going to be taxable. So you don't charge the tax to your customer. That contractor becomes the consumer of the materials and supplies themselves, and they're responsible for paying the tax. They cannot pass it on to their customer as a tax. You can bury it in the price that you're charging for it, but you can't call it a tax because you're responsible for the tax. So that's another problem area there. Um, Whenever you're doing any type of new construction or remodeling or opening up new locations, there's generally permits involved. And auditors go out and look at the different places where you'd get building permits, and they form an audit target list because you're making a lot of purchases when you're doing a remodel or doing new construction. And these purchases, generally, you can't buy them for resale. And maybe if you're a manufacturer, there's some sort of manufacturing exemption. But a lot of times you're responsible for paying the tax. You're the consumer of those items you're purchasing. So that's what auditors are looking for. They're looking for people who are opening new locations. They may even be going to your website and looking on your website where you're going to be opening up new locations, permits and new construction. Yeah, excuse me, new construction remodels, you often need permits, so they're going to be looking for those. So those are just some common problems that people are going to run into um, with use tax itself. There can also be common problems with your use tax accrual system. And one of the biggest problems are people. You can have a great process, but if you don't train your people on that process and you don't spot check them to make sure that they're following the process, then you may think that you're being protected, but you're not. Turnover. Just as you get someone trained up, they decide to take a job at another company. You trained them for a higher position. So there's a lot of turnover. So when the new people are coming in, you got to make sure that they're trained. You got to make sure that they have the right tools because the person who's managing your use tax accrual system has to know about taxability. They have to have a tool that they can check to see if something's taxable in your state or not. It's that person has to have a knowledge and or the tools to make those determinations. So those are just some of the common problems. Um, it's I could go on and on and on. I mean, common problems. Well, we could talk about the,
Well,
common
but we're
problems in
gonna cut them
audits,
off.
and
Yeah.
or we could talk about the common problems
We'll,
with the use tax system themselves. But as you said, you're
we'll
cutting me off. Okay. We got to keep
we'll
this
cut you
kind of
off.
short. We don't want to
Let
lose
us know.
everybody out there in the crowd.
Yeah, let us know if you just want a whole episode of common problems. Let us know. We'll let Mike talk about them for an hour. So, but
How about a
Mike, I want to
day?
start
Let's
or a whole day.
let's have an
Longest podcast
eight
episode.
hour common problem podcast.
Yes, everybody's dream podcast. So, but Mike, I want to reel you in a little bit here. You mentioned a few things that were issues with contractors, and I wanted to, I want you to talk about contractor issues specifically and explain why, uh, why we're kind of singling this out here to begin with as well.
All right. So with contractors, contractors are people who are building or remodeling homes usually. They're doing something with real estate. So you could be installing a dishwasher into a home, and most states say that dishwasher is a fixture and it's not an improvement to the real property. It's too easy to remove and change. I mean, dishwashers break down all the time. You got to replace them, so that's not really considered an improvement to the property. So if you're a main question for a contractor is something going to be retaining its identity as tangible personal property, or is it actually going to be a part of the real property? Because if it's retaining its identity as tangible personal property, a fixture, then generally the contractor is considered a retailer. It could depend on the type of contract. So that adds another layer of complexity in there. But in general, if you got a time and materials contract, you're going to be considered a retailer of that dishwasher, and you need to collect tax from your customer. But let's say that you're installing a door, and the door is recognized by most states as becoming part of that real property. So therefore, you, the contractor, are becoming the consumer of the door and the materials incorporated into the real property. You do not charge your customer the tax. You pay the tax yourself. Where it gets really confusing is what happens if the contractor is a manufacturer. Maybe I made that door and then I installed it. So if I'm buying the door, then I pay the use tax based on my purchase price. If I'm manufacturing the door, well, it depends on the state. Some states are going to say you still use the cost of raw materials. We're going to treat you like a manufacturer. Other states say no. we're going to use it. We're going to make you use the tax basis as the price that you would have sold that door to someone else where you were not doing the installation. So it's some sort of finished price calculation. Some states, will spell out what goes into that finished price. But it's either going to be some form of finished price or the raw materials. So there's a lot of moving parts when it comes to contractors. Also, what type of contract could impact it? Is it lump sum? Is it time and materials? On lump sum contracts, a lot of times the contractor is considered the final consumer, um, even when it may not be an improvement to the real property. If you have an exempt customer, the rules may change. So lots and lots of moving parts when it comes to contractors, which is why we see so many problems with contractors, and each state has their own idea on how to do things. So it's hard enough for a contractor to get it right all in one state. Contractors are usually good, utilizing their hands. Sometimes only this sales tax issues, that's not their forte. And they just end up getting themselves in trouble all the time because sales tax doesn't often use common sense. Sometimes it does, a lot of times it doesn't. And if you're using common sense, you can get yourself in a lot of trouble. Um, so if contractors in one state are having lots of problems, what happens if you're a multi-state contractor? What happens if you're doing business in 3 or 4 states? Here where I live within 30 minutes of 3 states. It would be Texas, Louisiana, and Oklahoma, and all 3 states have their own ideas on how things need to be done. What happens if you're a really big contractor and you're doing business in 50 states? You got a lot more problems at that point. So,
Good for
lots and
you.
lots of contractor issues. And again, Ellie, we could be talking about contractor issues all day long, but I know that you like to keep these shorter, keep people's attention because nowadays we all seem to have 20, 25-minute attention spans. If we go longer than that, whoop, we're gone.
Yeah, we're gone. And you know what? Good for if you're doing contract work in 50 states, good for you. And also sorry about the potential exposure and problems you have. Anything else you want to say about that, Mike? Sorry.
No, I think that this is a good stopping point here.
Okay, great. Anything else in general you want to add to this kind of this format of this podcast right now?
Yeah, one last thing. We always want to be perfect, but in use tax, perfection should not be the goal. You don't want to try to, to prevent 100% of your problems because there reaches a point of diminishing returns. You'll spend more money trying to prevent all of your potential issues on a use tax basis um, than than you would if the state found you. I mean, a lot of your purchases maybe you have 1,000 purchases of $1 each. Do you really want to go look at every one of those items to make sure the tax is paid on it? So we mentioned earlier, you may just want to do a sample. So you're trying to get the bigger issues. You're trying to prevent where most of your pain is going to be. You want to capture those, but don't shoot for perfection. And that may seem counterintuitive, but you'll spend more money trying to prevent the issue than if the state actually found you and charged you. You got to take care of the bigger issues. I mean, you got to have a use tax accrual process. You got to be paying attention to this. It is a leading cause of large assessments, so you do have to pay attention to it, but you don't want to obsess over it so much that you're trying to prevent every last penny from becoming an issue for you because you'll spend more money than you'll save doing it that way.
All right. Well, thank you so much, Mike, for letting me quiz you a little bit today. If you have more use tax questions, let us know. If you have questions in general, let us know. We do offer many solutions and services at Sales Tax and More. And if you have questions about them or you'd like to work with us, please reach out to me directly. My email is emoffat, EMOFFAT at salestaxandmore.com. You can also go to our website, fill out a contact form, find out more about it. That's salestaxmore.com. And in addition to the services we offer, we have an entire series of free webinars, free resources, some charts on our website. So check those out as well. And thank you so much for joining us.
Thank you, everyone, and we hope you join us on our next installment of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales and use tax. Take care, everyone. Bye-bye.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.